Welcome to Financial Habits. In this video we are going to talk about NIO stock. So before starting this video, like this video, and subscribe to Financial Habits for future updates. Following an outstanding 2020, NIO continues to see strong demand for its luxury electric SUVs. However, as China's Tesla extends into Europe worldwide, semiconductor shortage and increased competition pose a challenge. Is NIO stock a good investment right now? NIO, which was founded in 2014, had no prior expertise in the automotive manufacturing industry. It did, however, promise a bright future. Wallstreet, its Chinese name, means blue sky approaching. NIO doesn't produce its own electric vehicles. Instead, it collaborates with Jianghuai Automobile Group, a Chinese state-owned automaker. NIO came back from the verge of bankruptcy last year by more than doubling sales of luxury electric SUVs. However, in addition to Tesla, it confronts supply concerns as well, as increased competition from Chinese tech and auto titans, TSLA. As a result, NIO's stock is down 39% from its high of 66.99 on January 11th. Fundamental analysis and NIO earnings. NIO trails on key earnings and other basic indicators. It's a young, fast-growing business that's still trying to make a profit. On a scale of A+ to worst E, NIO stock has an EPS rating of 50 out of 99 and an SMR rating of D. The profits per share, EPS, rating compares a company's earnings growth to that of other companies. Sales growth, profit margins, and return on equity are all factors in the SMR rating. NIO's EV sales increased 95% year-over-year in May, but declined about 6% month-over-month, owing to a global chip shortage. However, in June, China's growing Tesla reported a resurgence in sales, reiterating its forecast for 21,000 to 22,000 electric vehicle deliveries in the current quarter. NIO reported a larger than expected first quarter loss on April 29. NIO lost 48 cents per share despite a 529% increase in revenue to $1.22 billion. NIO's gross margins improved from quarter to quarter, and it generated positive cash flow from operations. NIO sold 20,060 electric SUVs in the first quarter, up 423% year-over-year. Despite a surprising widening of losses in the first quarter, losses are expected to shrink this year. NIO is expected to cut its losses to 65 cents per share in 2021, down from 66 cents in 2020, according to analysts. According to Zacks Investment Research, revenue will more than double to $5.19 billion in 2021. In 2022, it is predicted to lose 15 cents per share while revenue increases by 82%. On Wall Street, 5 analysts give it a rating. According to Zacks, NIO stock is a buy, 4 are holds, and none are sells. On May 25, Bank of America analysts predicted that NIO's order momentum would pick up. They maintained a buy rating on NIO stock, citing strong sales, expanding margins, and new product releases as reasons. IBD Live, a new tool for stock market analysis on a daily basis. Technical analysis of the NIO stock. According to Market Smith chart analysis, NIO stock failed to break out over 57.30 in February, and there is no new buy point in sight. The stock has recovered from its low of 30.71 on May 31st, and is now trading above the 50-day moving average. After undercutting the 200-day line, the 50-day line is straightening out. There could be a bottoming entry if NIO stock can go above the April high of 43.22. NIO stock's relative strength line is strengthening after a recent dip. For the majority of 2020, it rallied strongly. A stock that has a rising RS line is outperforming the S&P 500 index. It's the blue line in the diagram. In September 2018, NIO stock went public at a price of $6. Due to sales and cash flow issues, it fell to a low of 1.19 in late 2019. With a comeback in electric vehicle sales in 2020, the stock skyrocketed. The stock receives a 52 out of 99 IBD composite rating. In a single score, the ranking includes key basic and technical parameters. However, NIO's performance over the past year has been in the top 2% of all stocks, according to a near-perfect RS rating of 98. It well exceeds the 80 or above that top growth stock investors would want to see. The D+ accumulation distribution rating from NIO suggests moderate net selling by large investors over the last 13 weeks. NIO has a lot of institutional support, As of March, 812 funds own shares in the company. According to the IBD stock checkup tool, Nio has 8 quarters of rising fund ownership. How to find growth stocks? This IBD tool makes the process easier. The electric vehicle competition in China is growing. Nio intends to sell electric automobiles in China's luxury market. Li Auto, Li, and Xpeng are 2 of its competitors, XPEV. Furthermore, Geely, a Chinese automaker, and Baidu, BIDU, a tech company, want to collaborate on the development of electric vehicles. Foxconn, an Apple AAPL supplier, is also interested in the electric vehicle sector. Geely has officially introduced Zeekr, a new luxury electric vehicle brand. With the Han electric car, China's BYDFF, has made a huge push into the premium market. BYD is one of the world's largest EV and battery manufacturers, with Warren Buffett's Berkshire Hathaway, BKRB, backing. Tesla, TSLA, Ford, F, and Volkswagen, VWAGY, have all unveiled alternatives to Nio's popular new electric crossover, the EC6. Tesla's Model Y, Volkswagen's ID.4, and Ford's Mustang Mach-E are among the EV competitors, all of which are built in China for Chinese consumers. Nio is expanding its manufacturing capacity in China, and preparing to launch its first international sales in Europe this fall. The ES8, a luxury electric SUV, will make its debut in Norway, a Tesla stronghold. Do you want to know who the next big stock market winners are? Begin with these 3 steps. The future of Nio and EV stocks. Nio, Li Auto, and Xpeng are growing their business in China to compete with Tesla. In the second half of 2021, Nio plans to raise monthly EV production to 10,000 units. By the first quarter of 2022, it plans to sell 150,000 units each year. Due to a chip shortage and high demand for its new, longer-range batteries, it's currently limited to 7,500 units each month. Nio is a sport utility vehicle. Analysts are optimistic about both China and global EV sales, which is good news for Nio stock. According to the China Association of Automobile Manufacturers, EV sales in China are predicted to increase by more than 30% to 1.8 million units in 2021, owing to attractive new launches. According to IHS Markit, global EV sales are predicted to increase by 70% by 2021. In the current quarter, both Nio and Li Auto intend to more than triple EV deliveries. Despite Nio shutting down production at a factory for 5 days in March and April owing to a chip shortage, the company has continued to grow. Meanwhile, Xpeng reports a nearly 400% increase in Q2 deliveries. Due to the semiconductor shortfall, Deutsche Bank analysts predict 95,000 Nio EV deliveries in 2021, up from 43,728 in 2020 but down from a previous forecast of 100,000. Nio isn't the only one who feels this way. Tesla, Volkswagen, VWAGY, General Motors, GM, and Ford, F, were all affected by the chip shortage. According to Morgan Stanley, as the electric vehicle market increases, battery supply could become the next hurdle for automakers. New and forthcoming electric vehicles, such as the EC6 and ET7, are expected to accelerate Nio's growth. The ET7, an electric vehicle, may be the first to feature a solid-state battery and a range of 600 miles. Meanwhile, Nio's business strategy revolves around battery swapping technology. Nio launched a battery subscription plan in 2020. The car and the battery are, in essence, sold separately. Users can save money by purchasing Nio EVs without batteries, and renting batteries for a monthly cost. They also have the option of swapping automobile batteries based on their need. Last year, Nio purchased XPT, a manufacturer of battery packs and electric motors. Nio intends their autonomous driving technology to produce recurring subscription money in the future. Tesla and Xpeng are the first to do so. See how to find, track, and buy the best stocks with IBD's stock of the day. Is Nio stock a good investment right now? Fundamentally, Nio's financial situation is improving, after debt and liquidity concerns crushed the stock. In China, Nio is reducing losses while driving massive top-line growth. Nio's foreign expansion gives the company greater room to flourish. It is also developing new battery technology. However, the EV wars are heating up as conventional automakers and IT behemoths scale up or enter the fray. The chip supply shortage is a headwind for automakers in the short term. Battery availability could be an even bigger negative for EV companies in the long run. Nio stock is still in a bear market from a technical standpoint. If Nio goes above the April high of 43.22, it might provide an entry point from a bottoming base. Keep an eye out for developments on a new purchase point. In conclusion, Nio stock is not a good investment right now. What do you think about this video? Do let us know down in the comment section below. If you enjoyed this video and want to hear from us again, be sure to hit that subscribe button before you go.